Good afternoon, Phoenix Blue traders. Wishing you all a very, very happy new year, and may 2016 be fantastic. I just want to say what a way to start the 2016 year with a first day of trading madness. I'm sure you all noticed and experienced some of the volatility yesterday, but what was it down to and what created it? Well, I'm not sure if you all know, but with the uncertainty going through China and then some very bad PMI numbers coming out of 48.2. This has now been, I think it's the fifth month in succession now where the PMI has been under 50. Now, the key number is 50, and what that says to us is anything above 50 and it means an economy is in growth. Anything below 50 and it means an economy is in contraction. So these numbers are very key. Now, the fact that it's been the fifth consecutive month in contraction shows that a major slowdown in the second largest economy in the world. They also implemented a new key trigger, which was that if the stock markets fell by 5%, it would activate a trigger system or a short circuit where all stock markets in China would be closed. Now, what this means is that yesterday, the markets fell by over 5% and it triggered the cutoff, meaning all markets, no further selling of stocks could actually take place. Well, this happened, and as you saw, panic set sail throughout the world markets. Okay, so let's take a look at some of the markets right now. So we're going to focus on euro dollar, Kiwi dollar, Aussie dollar, sugar. We'll also take a look at gold as well. So we're just going to look at some of the major markets right now. We're currently on euro dollar, and I'm just going to highlight some of the moves that we're looking at and why we're looking at getting involved in these potential moves. Okay, so I've just zoomed out a little bit to look at the euro dollar going back to March. So this is 2015 lows. We can see this trend line that was respected, eventually broke, and then we were looking for the retest, which we know we got in short at. Now, the follow-through wasn't quite as expected. It came down to test the zone we were watching. It's come back up. Now, there was no further entries for us, even though we've had decent follow-through right now. But what we are looking at and what we are going to take advantage of here at Phoenix Blue is we're going to look for this pullback into the 50% retracement and our key area here based off this resistance back here, a test of structure here, test of structure here, and after the madness yesterday, it tested, failed to break through. Now we're going to get a close through today. So tomorrow I'll be looking at shorting opportunities euro dollar from in and around 108 to 108.20. Looking at testing the 105 area with then further movement down. Why am I expecting further movement down? Well, not just off the chart. We've got to think about fundamentals as well. The fundamentals, we've got monetary policy divergences. So this chart is looking good to go a lot further for me. Okay, so just moving on now to sugar. This is a trade we've been in now for a good few weeks. It's not really moving yet, but we have had to sit through the Christmas period where there is low liquidity in the market. This was one of our commitment to traders signals. We're looking for a push down to the low somewhere down here. Hopefully we're going to start seeing some of this move now the market's coming back to normality. We've been in this sort of consolidation area now. We did have commercials showing extreme positioning to the downside, a big increase in contracts. Now, unfortunately, Christmas came at the wrong time for us. What do I mean by that? Well, if we went to our commitment to traders study and we looked at the contracts, we saw that the commercials heavily reduced their number of contracts, which probably means, and it's a good understanding of why the market went sideways. Yeah, it was just a reduction in contracts, nothing happening. What I'd like to see at the end of this week is we can see that the commercials have come back into town. They're increasing their short contracts, and I'd like to see us get a follow through. I will look to take some money out of the trade at around 0.1240. Okay, moving stop to break even at that point, and then look to take the rest of the money out of the market. Okay, so let's just move on to a couple of the indexes. We'll look at the S&P 500 and the Dow Jones. Right now on the chart, what you see is the S&P 500. So here we go. This is the long sort of, this is where the market tested after a huge collapse last time in China. And what you see here, this red zone here that I'm highlighting is, this is what I call sort of the plunge protection team, i.e. stopping any sort of crash. Because look, here we have testing here, resistance, it breaks through, test support, test support, test support. Off it goes again. Bad news out of China, we've got a crash back down here, testing these lows off this trend line, we can see quite clearly. Look, the market rallied, it came straight back into our red zone again, pulled back down, off again. Now look, a weekly test, weekly test, weekly test, and weekly test. And this week, let's just drop it down to a daily chart so we can see exactly what's going on. Well, yesterday, the market came down, tested it, and bounced. Today, it's come in, test it again. So I think what we've got to look at and envisage is what's likely to happen. I think if we get a close below here, so what's this, 1987, if we get a close below here, I'm going to use what is support as resistance, a bit like it did here. We've got a close below, come back retest, and we'll look to short. Initial targets, 1890, I think would be a great idea. So want to see a close below, retest, and look to trade it short. That's what we're going to do here at Phoenix Blue anyway. That's on the S&P 500. Let's have a move up to the Dow Jones. Okay, so something very similar. We can see we'd had a beautiful trend in play here. Now, we'll look again. Here's our clear support zone. And here, this is our latest support zone. This is where we can see the market is tested. Here, support, 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 support again, then breaks through aggressively through the last bad news about China. And then again, it broke through, used that area to bounce off a couple of times as it is doing right now. So let's just drop down to the daily chart. And we can see nice foot 1, 2, 3, 4. And today is the 5th touch of this zone. So we're going to do exactly the same as the S&P. So we've had those touches. We're going to wait for a close below here, come back for a retest, look for our price action, and trade it back down to the lows. I think there's obviously, in terms of risk reward, depending what the price action we see and what time frame we're trading, in terms of sheer volume, it looks like we're going to get a better risk reward on the Dow Jones. Okay, so that's the Dow Jones, that's the S&P we've looked at, and we looked at the correlation with the Japanese yen. We've also looked at Kiwi, Aussie, and sugar of trades that we're currently in. Kiwi and Aussie doing really well, having over 3% out in our first trade in Kiwi. Aussie, we've had over 2% in our first trade. Again, this is a nice way to start the new year. Unfortunately, sugar has been sat sideways and it's in a negative position at the minute, but let's see how this follows through. Other than that, guys, I think that's about it now for Trading Tuesday. Any questions, please feel free to email in on info@phoenixblue.co.uk, and look forward to seeing all you subscribing on the YouTube channel. Thank you.